Will the price of gold rise or fall in the next weeks? In this video I will show you how to perform a complete price forecast on every financial market. But first of all, let me show you a new feature we have inside the Forecaster terminal, the rankings.
It's a very powerful engine, let's say, because we can have, for example, in this case for the Nasdaq 100, the over or the under valuation of the entire index, and this number is calculating, doing the math with all the fair value from the component of the index. You can also see how the index is composed by sector. And as you can see, for example, Nasdaq 100, everybody think that is the technology index of the United States, but it's not true. We also have other sectors. The important thing to know about the Nasdaq 100 is that we don't have any financial companies here inside. So we have technology, of course, which is a very big piece of the cake in this case, but we also have other sectors. And of course, as I showed you last week, you can put in order of market cap, of course, fair value, z-score, f-score, and all the others ratios. But you can also do something really interesting, which is push this button, best to worst, and in just 1 second we will get all the best shares from this index. Of course, we can also calculate the fair value for the top 10. We can also calculate the fair value for the top 30, and we can calculate the fair value for every single sector. And of course, we will have all the stocks relative to this specific sector inside here the page. But today I don't want to talk. Yes, of course, David. Next week we will all the other index will be available. So you will have Europe, you will have Latin America, Asia, and all the other ones. So if you need something else, if you need something very specific, please let us know. You can write an email here, info@forecaster.biz, and we will try to give you what you need. Okay, so yes, we will have all the index, all the most important indexes from all around the globe. But today I would like to respond to a question I had last week, which was very interesting because I had a question from Ali. He asked, can you give us an example if you want to buy gold, for example, or live cattle? We are talking about commodities, and how this software will help out the decision. Okay, so I would like to do something really interesting today because I would like to do a comprehensive analysis on gold in order to understand if it's good, if it's time to buy or sell it. Okay, so for example, of course, we can start from the gold page, the main page, which is the overview. So we can have a look to all the previous performance, the historical performance of this commodity in this case, but we can do everything also for all the other instruments you can find in the Forecaster terminal. And after that, we can go and first of all, we are talking of gold future, which is a future which is traded at the CME, the Chicago Mercantile Exchange. We can go and have a look to the quote report. Okay, quote report, something really interesting. Here you have the net position of all the different categories of traders that trade the gold future at the CME. Okay, so for example, here we have the managed money, which are the, let's say, smart money, for example, CTAs and hedge funds. And what we can see here talking about the gold is something really interesting, because look, we have a trend here on gold. Oops, sorry, I am without the mouse, so I'm not a very good artist with my hands, sorry. But look, I would like to show you, because if we have a trend, for example here for the gold prices, which is in blue, we can find also the same trend here in the net position. Okay, so this is something really interesting, because when we have the same trend both in the prices and the managed money position, it means that we have a solid, in this case, upward trend. Okay, very, very interesting. So looking at the COT report managed money position, we can say that even if the prices of gold went up a lot in the last month, this trend is still bullish. This trend is still strong. And this is why probably prices will grow up even in the future. Okay. Talking about commodities and talking about the COT report, something very interesting to do all the time we do an analysis is to watch the producer, merchant, processor, and user. Okay, why? Very simple, guys. These guys using the future in order to protect the real life position on this commodity. Okay, this is why, as you can see, historically they are short positioned. Okay, all the time they have been short, because they just use the future in order to protect against volatility on gold prices. Okay, but the very important thing to understand when we see the producer merchant position is that these guys are smarter than the smart money, because of course they know exactly how much does it cost to produce gold, how much does it cost to mine gold. And these guys also have another very important information, which is the number of orders they have. So, for example, as you can see, if, for example, they do not cover their position at all, for example, like in this case, what does it mean? It means that the price of gold is very low and they expect the price of gold rising in the near future. Because if they know that the price is too low, they tend not to be covered with the short positions. Okay, so what we can understand from this kind of information, something really important, because these guys know exactly which is the gold fair value. And this kind of thinking works even with all uh, the other commodities, and maybe we will see some other example in few minutes. So in this case, what we can understand from this kind of position, from the producer, merchant, and processor position, we can understand something really interesting, because at the moment, even if the prices went up a lot, these guys are bullish. Because look, if we go back in the past, the same level of net position today, okay, are the same of many years ago, where we had a very important minimum in prices. Okay, also here, also here, also here. This is a level of net positions where producer expect a growing price in the gold. Okay, So the first step of our analysis for the gold start from the COT report, because in order to understand if the trend is solid, we have to see the managed money position, and if we don't have any divergence between the prices and the position, we are in a strong trend. So in this case, we are in a strong upward trend. And talking about the, let's say, commodity fair value, we have to go back in the past and watching the producer merchant behavior in order to understand which is the fair value of the commodity we are analyzing. In this case, we are talking about gold, and we see that this kind of level, this kind of net position level, is a level where they feel that the price has got lot of upside potential. So now we can move and we can analyze something different, because here in the section overbought oversold, we can analyze the statistics of the prices. Okay, so for example, in this case, of course, we see the price went up a lot in the previous month, but what we have to check, if we still have buyers for these prices. And in this case, the first indicator we have to watch is the Wyckoff causes effect. What tell us this kind of indicator? Very simple, because if the indicators goes up, it means that we have more buyers than sellers. Okay, so in this case, what we have? We have a strong upward trend, okay, that is going exactly like the prices. So in this case, we doesn't have any divergence between prices trend and the indicator trend. And this is why also this indicator tell us that the prices could rise again, because here on this top we didn't have a divergence. We didn't have an indicator that told us that the demand, the supply was much higher than the demand. Okay, look, for example, in this case, we can see a complete different and opposite situation, because here we have a lower low, okay, compared to the previous one, but look the indicators. Even if the prices went down and we had a lower low compared to the previous one, the indicator told us that the demand was growing a lot. Okay, and look, the demand went even up on this line, which is the zero level. So starting from here, from this line and going up, we have more demand and less offer. Starting from this point and going down, we have less demand and more offering. Okay, so in this case, talking about buyers and sellers, we still have, even if the prices of gold went up a lot, we still have a lot of buyers. Okay, we can also have a look to the speed indicator, which is something calculated completely different, because this line is nothing else than the velocity of this line. Try to imagine at the prices like a car, we just calculate the velocity of the car, okay, with a very simple formula. You can find it here, of course. As always, I tell you, the forecaster terminal is not a black box. We really love that you understand what's happening behind the prices, okay. And also in this case, we don't have a divergence, because here we have high prices, and here we have a higher high, and this is the same that happened here on the indicator. So in this case, we have such a huge potential in upside. Okay, so statistically speaking, we can say that this trend is safe, this trend is strong, and this is why probably we will see higher prices in gold in the next month. Okay, this is not all, guys, because of course we can switch also to the seasonality part of the software, which is very, very interesting. And look, we can add, of course, we have the 5-year, we can add also the 10-year, the 15 years, and also the 20-year in order to do a very complete analysis. And what we can see here is something really interesting, because we can divide the analysis in two parts. Okay, we know the trend is okay, because we saw the cut report, we saw the overbought, oversold with the statistics. Now let's watch what the seasonality told us, say to us. And starting from today, we can highlight all this part of the chart, which is from today until the end of September. And if we scroll down the page, we can see all the statistics. And look, guys, these statistics tell me that until the end of September, prices could go random walk, can go sideways. Why? Because look, we only had 53% of long trades in the last 15 years. Only 60% of time in the last 20 years we had a positive return. Okay, look, and this is the average of the returns. We have 13, 7, 7, 7. If we try to do a short trade, look, we have exactly the same situation. So let's say we have a 50-50 percentage of chance that the prices goes up, and 50 percentage of chance that the prices will go down in this specific time frame. Okay, and we also had the same average return. What does it mean? It means that probably in this period prices of gold will go sideways, and we will have different opportunities in order to get inside a long position. Everything changed starting from the end of September, so let's say October, until the April, mid-April of the next year, because look, everything changed. We scroll down, and if in this exactly time frame we did in the last 20 years a long trade, 75% of time we would have a positive result with an average return of 13%. Look how the statistics change when I try to go short and when I try a long. Okay, perfect. Here you can understand you are exactly in a time frame, in a specific period where the gold is probably that goes long, that goes up. Okay, so we did the cut report, we did the overbought, oversold, we did the seasonality. What will happen to the prices? Thanks to this analysis, we can of course say which is not now the time to buy gold, but all the time we will have a lower low, could be a good moment to get inside this commodity, because probably we will have higher price in the next month. Okay, perfect, guys. I think I told you everything. Yes, I would like to show you something, because if we go in the cut report page and we go, for example, in the which was the live cattle was asked by Ali last week, and we go, for example, here. Let me see. I would like to show you something, because in order to understand which is the commodity fair value, you have to watch this specific category for every commodity. And of course, you have to see all the history regarding a specific commodities, and you have to watch which is the level of the net position that create a minimum in prices. Okay, so for example, we can say that at this level, which is, for example, this one, okay, these are the minus 28, let's say, it's a good level in order to go long, because all the time we reach this specific level in the net position, talking about producer, merchant, and processor, we have a low. And this kind of thinking works for every commodity all around the globe, because, as I told you before, these guys, the producer, the merchant, and the processor, know exactly which is the fair value of the commodities they are operating with. Okay?